This is the part of the whole process where we really get a heads up on if we need to pay for anything out of pocket, what is it going to look like? Understand that this is really a tutorial in what does it mean to borrow? So a couple of years ago, students who were graduating from college said, I had no idea I actually had to pay these loans back. So now they make everyone do what's called loan counseling. When you get your award letter from the school, that's the first step. So you're going to accept the financial aid in the school's portal. Now, when you accept it in the school's portal, that does not obligate you to any of those loans that they're giving you in the portal. It just lets the school know, I'm interested in taking this out, so thank you for providing that. What we're going to do now, and taking this next step on the actual government's website, is what will actually disperse the loans directly to the school. The loans, when they get dispersed, it's only when the school actually needs the payment. So for example, the loan never goes all up front to the school to pay for the full year or the next 2 years or 3 years. It's gonna be per term. So if you're on a quarter system, it'll go per quarter. If you're on the semester system, it's per semester. So you're not paying interest for loan money that has not been dispersed. This same website that I'm showing you right now is relevant for whether the parent is using the loan or the student is doing the loan. So this is the same portal entry that we're going to use to either sign up for the parent loan or the student loan. However, and this is the one nuance that I want everybody to make sure that they get, when we do log into this, if you are planning to sign up for the student loan, which is called the Stafford loan, then you're going to log in with the student's FSA ID. Remember the FSA ID that we all created when we did the FAFSA? That is the same ID that you're using when you log into this. If you're gonna apply for a parent loan, so a parent plus loan or parent direct loan, you're gonna log into the same website, but using the parent's FSA ID. Okay, that's how they distinguish who's the borrower. If on your financial aid award letter from your school, you don't see an actual parent loan, that does not mean that you don't have access to that loan. You will always have the ability to take out the parent loan. And to be honest with you, it's the easiest loan that you'll ever sign up for. It's the easiest loan that you'll ever get. It's because you can never walk away from these loans. They have to be paid back. So just be cautious as I go through some of these disclaimers with you. I'm logging in right now, and I'm going to log in as a parent. You're going to get this disclaimer here. I'm going to accept. It's going to take us to our home page. This is where everything really starts. This is where you can navigate to anything you really need. Apply for aid. We already did the FAFSA, so we know that that part's done. We're going to apply for a plus loan. So for the parents, we're going to always choose this right now. So applying for a plus loan. At the end, once we complete that, it'll let us know whether or not you are approved based on your credit history. And then applying for a parent plus loan will also be something that I'll talk you through as well. Complete the aid process. There's something called a master promissory note for undergraduate students. This is always going to be a requirement for you. So just know that in the master promissory note, they're going to ask for 2 references. So this could be a neighbor, a friend, a grandparent. These are not co-borrowers. They're not people that are on the loan. They're just 2 references that if they can't contact you, they need to get in touch with someone. So when you do the MPN, Master Promissory Note, just know that you'll need 2 references to complete that. So, and then the other thing would be this one. It's called Complete Entrance Counseling. So I'm gonna walk you through this part first, but I'm gonna show you here. I'm a parent, and what we're gonna do here is apply for a Parent Plus loan. So I'm clicking on this. Start here. The award year will be 2020, 2021. You're gonna list your student here. It's gonna populate the information. Give them your phone number. Now here's where you can really start to answer the personal questions on how you want the loan to be treated. Do you want to defer the payment of your direct loan while the student on whose behalf you've obtained this loan is enrolled on an eligible school? So it's up to you. If you say yes to this, that means that you will not make any payments while your student is enrolled in school, at least more than half time. So if you say no to this, then you will be in a repayment situation right away once the loan gets dispersed. If you choose yes, you want to defer the payments, that means that the interest on any interest-bearing loan will start accruing right away, but you're not paying that interest. The interest gets added to your principal balance. This is called capitalization of interest. So that's a very important term I want everybody to know. When you don't pay on a loan and it's accruing interest, you're going to be paying interest on top of interest, which is basically capitalization of interest. So it's just whichever has not been paid, you're accumulating interest on that. It doesn't change any of the terms of the loan, whether you say yes or no to this. These are all amortized over 10 years. So once you borrow, let's say the first loan that you borrow is in 2020, that amount will be paid back by 2030. So here, I'm just gonna say yes, I wanna defer that. Do you want to defer the payment on the PLUS loan for 6 months, beginning on the date the student ceases to be enrolled? So that means once they have graduated from college, do you want to have a 6-month window where once you're finding employment, once they get their job, then 6 months afterwards, you can start making your payments? Normally, I'd say go ahead and take that if you are gonna defer that. I authorize the school to use my direct loan for any other educational related charges the student incurs. This is again optional. If you'd rather the loan not pay for any incidentals and you want to pay for that out of pocket, and usually that's not much, I try to advise families to avoid using this loan for any kind of small things. Only really use it for the bigger payments like the housing and the tuition if you can. If there is a credit amount that's left over based on the disbursements of the loan, say you've received your financial aid, and if there's any amount that's over the amount that was needed, do you want that balance to be sent to you, the parent, or the student? So normally I'm going to say me, the parent. Let's select the school. So here at this stage, you can either do, I want to borrow the maximum PLUS loan amount for which I am eligible as determined by the school. So for example, if the school costs $20,000, you've been awarded $5,000 in financial aid, the leftover amount is $15,000. What you're saying here is, I just want to borrow whatever the school says I need as the remaining balance. If you are of the mindset that maybe you want to make some payments on your own, and not utilize the entire loan to pay for all of the education, you can specify the exact amount that you want to borrow from the loan. So let's say you already have in mind that maybe you want to pay $500 a month directly to the school. You can do that. You could just set up a direct payment plan with the school. But if you wanted the loan to supplement the rest of it, you can go ahead and specify that here and then put in the exact amount. And then you'll notice here, it gives you the time frame and it specifies for when the loan will be eligible for disbursement. So between this year and then next year. Continue. Okay, so they just want to verify this, current mailing address, so forth. This is the basic stuff. Continue. And then here, you're going to just have an overview to make sure that everything's correct. Open the important documents. Continuing, then you want to certify everything. All right, you have successfully submitted your Parent Plus loan request and it's been approved. Great. If you ever wanted to look at your documents that you've completed, you can go here under Documents. So let's say, for example, you want to know, did I complete a loan counseling session? So it'll actually tell you, financial awareness was done May 12th. So complete entrance counseling, starting here. So again, you want to identify the school. So because I'm doing this for an undergraduate student, I'm going to click this top one. I'm an undergraduate student. Continue. Okay. So right now, it's just telling you there are no loans currently in the student's name. So as of today, and this is the open book test, as of today, how much do you owe in student loans? You all are going to get that first one right, I promise you. All right, check your knowledge. What sources of federal student aid do you have to repay? Grants, federal work-study jobs, federal student loans, or all the above? So it's going to be federal student loans. These are things that I would encourage you to just take the time to read or just become familiar with. Direct subsidized loans, direct unsubsidized loans. If you get a subsidized loan, that means that it's interest-free as long as the student is enrolled in college. So if you, on your award letter, you see a subsidized loan, it's a small amount. For freshman students, it's usually about $5,500. That's an interest-free loan if it says subsidized. If yours says unsubsidized, that basically means that there will be an interest accruing, and I want to say it's about 4.3% right now. Oh, it's 4.5%. So that's the main difference between subsidized and unsubsidized loans. Currently, the parent loan, parent direct loan, the interest rate is just over 7%. Federal Perkins loan, some of you might see this on your award letter right now. This is not awarded to everybody, but that is a federal loan that you could also receive in some cases. So this is just talking about the limits. What are the limits that a student can borrow over the course of their education? First year is $5,500, $6,500, $7,500 for the last 2 years of their undergraduate education. So $27,000 over the course of the 4 years for an undergraduate student to borrow on their own. Okay, in this case, you don't literally have to fill in these figures to complete loan counseling, but it's good practice for you if you would. So if you were to look at your award letter and you said, I received $2,000 in scholarships, I got a $2,000 work study, and let's just say you got a grant of $5,000. Great. So that's $9,000 in total resources that you have. Because we chose the school already, they're showing us that this is the total cost for the school based on the school that we entered. So tuition, housing, all the other expenses. So the next question that they're going to ask us here, what are your total estimated expenses for the year? So the expenses are what's illustrated right here. 65,818. And then how much funding do you have available? So if you look back up here, 9,000. Now, like I said, you really don't have to fill this in. It's not a requirement to complete loan counseling, but it's still just good practice. Managing your expenses, they're just trying to give you some heads up on how to be fiscally responsible. You will be notified in writing each time your school disperses a portion of your loan. This is true. If school costs are less than the loan disbursement, the amount remaining will be paid to the student or borrower. So this is true. Responsible borrowing, I think most of you are all responsible, so I don't really need to go through that. Paying student loan interest while you are in school will reduce the overall amount you have to repay, so true. So this is just saying it's a way for you to kind of calculate the interest savings. So if you were to be, if you started to pay your loans back, you finished school in, let's say, 9 months from now, and you started to make your payments now, this is the potential amount of savings that you would have based on not having to accrue more interest on the unpaid balance. Continuing. So this is another thing that it's not mandatory for you to fill out, but I'll just do this anyway. So $50,000 as projected annual income. What this is showing us is what could be potential repayment plans. So your monthly income after your withholdings. If you were to have a standard repayment plan, There's a graduated repayment plan, extended. So these are things that you could familiarize yourself with. The longer the loan goes, the more interest you will pay. So for example, if you were to use the standard or the graduated loan repayment plans, those are going to have less interest that you'll pay over time. But there are also these options too. There's also loan forgiveness plans. So I definitely encourage you to read into that. If you make 10 years worth of payments, so 120 consecutive months of payments on time, and you don't miss any of the payments, in some cases, the remaining balance will be forgiven. So look into those options as well. Who do I need to start? When do I need to start making payments? So this will give you information on that. Understand that once this loan is set up, there's an entity that's called your loan servicer. The loan servicer will actually be in communication with you to walk you through all of those particulars that you want to work out for your loan. So there's different companies, like for example, there's a company called Great Lakes. That's a loan servicing company. There's just a few different ones. You will be assigned a servicer. So any questions that you have about your loan, you could speak directly with them. And then here's some more just checking your knowledge. So you must start making payments on direct loans 6 months after you leave school. True. Who do you contact to select or change your repayment plan? Your federal loan servicer or your school's financial aid office. So you're going to contact your servicer. And who must you contact? You must contact your federal loan servicer anytime your address changes, you drop below half-time enrollment, or you leave school. So true, you always just want to stay in communication with your loan servicer if things change. So if you were to postpone your payments, meaning that you had a financial hardship or you needed a forbearance, which means that they give you an extended period of time where you don't need to make payments because of a financial hardship, it's just letting you know. So I'm just going to say I'm going to postpone for 12 months. This is telling me the capitalization of interest, what all the amounts would end up looking like if we actually had to extend that loan and we had to go into a forbearance. It's good just to kind of give you a heads up as to why it's important to be a responsible borrower. Deferment and forbearance are ways of temporarily postponing your federal student loan payments. True. If you're having trouble making payments, your federal loan servicer can help you change your plan, determine if you're eligible for deferment, determine if you're eligible for forbearance, or all the above. Look into some of these forgiveness programs. For example, if you're going to go into a teaching profession or into the public sector, there are some forgiveness programs here. Continue. Planning for the future, and really just making sure that they're trying to, as a student or as a borrower, trying to keep your expenses low if possible. Opening up a savings account, creating some credit history for the student, spending wisely. For some of you, you might be giving your student an allowance while they're at school so they can just have some spending money. Maybe help them understand what credit means and how that works. Check your knowledge. So a tax deduction reduces taxable income. That's true. This is going back to the information that we talked about earlier. Putting in the gross income of 50, withholdings, the net income. So if you were to repay your federal student loan, it's based on your leftover income after all your withholdings. This is telling you where you can go to get some credit reports. And I'm going to submit counseling. So once you do that, that part is pretty much done. And the same counseling that I just went through for the parent is the exact same counseling for the student loan. Remember, for the Stafford loan. So you're just duplicating what we just did for that.
Can you hear me, Trevor?
I can.
Oh, I just wanted to know, you went by real quick on do you apply as one person, one parent, or do you put both parents' information in?
Oh, good question. So you're just going to include one parent. And
is it advantageous to pick someone who's not self-employed kind of thing?
It doesn't matter. It's just based on the credit history of that. So it doesn't have anything to do with the income.
Okay.
They don't ask any of those questions.
I have a question.
Yes.
Is it better to apply through the student or the parent?
Okay. So the student loans, which are the Stafford loans, will be lower interest than the parent loan. So if you are going to borrow anything for college, I always recommend utilizing the full amount of the student loans first.
On the loan, it said you can choose whether to pay it off right away or wait for the kid to finish school. Mm-hmm. If you press wait for the kid to finish school, could you start making payments anyway while they're in school?
Absolutely.
Okay, so it would probably be better to defer until they're done, and then if you can make payments, you just do it.
You can, and the loan servicer will really specify those monthly options. So if you just wanted to make the interest payment on that, you could definitely do that.
Okay, thank you.
You got it.
Is there any difference for our taxes as far as doing a student loan versus a parent loan? For our income taxes?
Right, so for the parent loan, there's a small interest write-off that you can take on your taxes for the parent loan. And that's going to be based off of the family's total income. But yeah, so by repaying a parent loan interest, then you can take a small deduction on your taxes for that. Yes.
What happens to the loan if someone should pass away? Are the parents still responsible, or?
So that's one area where there will be a discharge. So basically, if the borrower were to pass, then the loan balance goes with them.
What is the time frame for filling out this loan? Like if he starts in late August, do this?
Yes. So good question. The first payment that's due to the school is usually in the middle of August. So if you can have this loan counseling, everything set up by no later than the end of July, then you're ready to go.
Hi, Trevor. This is Charles and Marianne.
Hey,
I just had a quick question. How are you?
Good.
When you apply for the loan, you're entering the amount that you're anticipating for the 4 years that the student's going to be there, or I wasn't sure of that. I know with Jonathan, he's going to be, I guess we're going to borrow more for that first year because he's going to be in the school, living in the dorm. But the second to fourth year, he's going to stay at home. We just wanted him to get that university.
Good. Yeah. So this is going to be on an annual basis. Just like when we're going to do the FAFSA every year, then this process will renew itself every year. So it's only dispersed per year. So if things happen and the student doesn't want to, or they switch schools, or we'll just have to do this process one more time in order for that loan to be dispersed.
So if you anticipate borrowing more for that first year, then you make the bigger amount, then of course the subsequent years, it'll be smaller because he won't be living with us anymore.
Exactly. Okay. So right, the amount that you borrow for the first year does not lock you in as to what you're going to be borrowing every year after that. It's on a year-by-year basis. Yeah, good question.
But they won't have to pay it till 6 months after they finish everything.
Correct. Right. Exactly.
Excellent. Thank you.
You got it.
Trevor, this is Stephanie. I have a quick question. I think I might have misunderstood it, but I thought I saw somewhere where it said that the max that a student could borrow was $26,000. Is that a misinterpretation on my part, or is that?
Yeah, so $27,000 would be the most that an undergraduate student could borrow on their own over 4 years without having any cosigner. So that's just like what they're doing is they're signing a master promissory note, just saying, once I finish school, I will pay this back. And that's what they can borrow on their own without any parent being associated with that loan.
Okay, so then if there's an additional balance between what they get of that 26 per year, then the parent would either have to do a loan or pay the difference.
Yeah, but just
borrow more.
just to clarify, Stephanie, so it wouldn't be the per year that's what they can borrow. So for the first year as a freshman would be 5,500, and then as a sophomore it's 6,500, and then for junior and senior years it's 7,500 each of those years. So that's over the 4 years would be 27,000.
Okay.
And then to answer your other question, let's say there's still a remaining balance, then the other loan would satisfy the rest of the balance, which is called the Parent Plus loan.
Okay. Got it. Thank you.
Does the 529 balance have any bearing on the Stafford loans or the Parent Plus loans?
Okay, so I'm actually really happy that you asked that. Kind of one of the biggest purposes of having a 529 is so that you don't pay the taxes on any of the gains that you've made in that account. However, you can only really apply those gains towards college costs in order for you to not have to pay the taxes on it. So you wouldn't be able to repay a student loan with a 529 and still get away from paying the gains, if that makes sense. So you could pay off the loan using the 529, but because it wasn't a direct expense to the college, you wouldn't get the benefit of the tax break on that, if that makes sense.
Right. So yeah, the consequence of that is just use the 529 up first.
Right, exactly.
And then whatever the balance is, then go to Stafford, then go to Parent Plus.
100%. Yep, absolutely.
Gotcha.
Thanks, guys.
Thank
Thank you.